So let me say something that might save you months of frustration. Most traders are not bad at trading. They're just trading the wrong market condition. And once you see this, you can't unsee it, because the difference between feeling confident and feeling like the market is personally messing with you. Now, if you've ever said things like, why does price reverse the second I get in the market? Or something like, I swear it was moving perfectly 5 minutes ago, then this video is for you. So by the end of this, you'll be able to look at a chart and immediately know which game you're playing, whether you're buying or selling, and more importantly, which game should you not be playing inside of the markets. If you're new here, I'm LaKiesha, and I've been trading and investing for 15 years, and just this year alone, I've made over $100,000 while working full-time. And I teach traders how to simplify their thinking, stop overcomplicating the charts, and actually stick to a plan that they can trust. And in this video, I want to be very clear about something up front. This is not about predicting the market. It is about recognizing behavior, because the market tells you what it's doing. Most people just don't know how to listen. So before we go any further, if you're brand new to trading, or if your biggest goal is just to take your first profitable trade or just first trade ever, then I have a program called the Trading Launchpad. That program is designed to get you there in 30 days or less without being overwhelmed. And if you're a new trader or been trading for a while, but you're still not consistently profitable, that's exactly what the Profitable Traders Academy is built for. I'll link both of those programs below, so that way you can choose which one is a better fit for where you are right now in your trading journey. Now, let's get into this. So here's the thing that most traders never get taught. The market only does two things. It either moves with intention, up or down, or it moves sideways while it's deciding what it wants to do. And those two things are it. You have trending or ranging. Everything else you see is just noise, and indicators don't change that. Time frames don't change that. Your feelings definitely don't change that. Okay, let me show you exactly what I mean. We're gonna hop on the chart really quick. Okay, so here on the charts, we can see this Robinhood chart. This is just something that I just pulled up randomly, but you can see we are currently on the daily time frame. That is down at the bottom of this screen, and you can also see it up top as well. And looking at this chart, you can see that there are some trends inside of here. So basically, when I'm looking at a chart, I like to go on a higher time frame like the daily or the weekly, just so that way I can see very cleanly what is happening. And basically, I ask myself, is the price going somewhere? And if so, where is it going? So just opening up this daily chart right here, I can see very clearly that if we look at where price is going, we can see that price is starting basically in this corner and going here. So yeah, we got some other stuff happening inside of here, and that's totally okay. But basically, I see that the majority of the momentum inside of this particular chart is going in a bullish direction. So I mostly want to be focused on taking buys inside of this market. And that's pretty much it. That's the first step. So first, let's talk about trending markets. A trending market is a market that is consistently accepting higher or lower prices. Basically, this means that price moves, it pulls back, and it continues in the same direction. It's not always going to be perfect like we saw on that Robinhood chart, not always in a straight line, but with intention. And you'll also see all of this inside of the structure that the market is making. It'll be making higher highs and higher lows in an uptrend, and also it will make lower highs and lower lows in a downtrend. But here's what matters more than the pattern itself. In a trend, pullbacks are respected. Basically, they're just little breathers or breaks inside of the market. It means that price normally respects it, and price may move away from key levels and basically just staying away long enough in order for the continuation to make sense. That's the trend saying, I'm not done yet. I have more work to do. Okay, so now going back to my iPad, I'm going to show you exactly what I was talking about. So here's a situation on the same Robinhood chart. We can see that price pushed up pretty cleanly, and then it started to come down. This coming down is a pullback. Basically, it formed a support, and then it started to push up again. Even though it didn't break this this high right here, it stopped and then it went down and made a lower low. That's another story. But basically, I want you to get the concept of a pullback. It's basically a temporary pause in the main trend. The main trend here is going up, but it stopped right here. And if we look at this as well, we can also see that there are a couple of points along this uptrend where it took a break. So going back to a clean chart, we have the uptrend and we can see that there are some areas where it stopped. So basically just took a break right here, took a break right here, here. And basically these are just little supports. So, and then obviously this right here. So we can see that price when it came back here, there was a support here that was being respected. And then there was also support here being respected as well. And then also if you go on smaller time frames, you'll be able to see this better. But there was a support also being respected here. So it came here and it starts to push up. It looked like it was going to continue to go, but it didn't. And we won't get into that and what that means, but basically I just want you to see that when we have a pullback, that as long as it's not breaking the previous support, then basically the market is telling you that there's a possibility that price could continue to move higher in this situation since we are dealing with an uptrend. So now, after we've looked at the market structure, let me tell you where most traders mess this up. They are treating trending markets like they need to catch the exact bottom or the exact top. They start selling when the market goes up. When that happens, a lot of times people get short squeezed because they try to short and the market's still going up. They try to guess reversals. They fight the momentum. And then they say, this market is all over the place or this market is so random. No. The market was trending, they were just impatient. And in a trend, the goal is not perfection. The goal is alignment. You want to be aligned with the main direction of the market and not try to be smarter than the trend because it can wipe you out like that. And if you've taken some trades where you've lost, you know exactly what I'm talking about, especially when you've tried to take a counter trend trade. That's also what that means when you try to go against the trend. Now let's switch gears a little bit and talk about ranging markets. This is where most traders give back all of the profits that they may have made. A ranging market is when price is moving, but it's not really going anywhere. It's basically bouncing between two areas, usually support and resistance. And it does this over and over and over again, and it's really frustrating. And this is the market saying, I don't know where I want to go yet. Okay, so let me hop on the iPad and show you exactly what I'm talking about. Okay, so here we are back on the iPad and we are now looking at the Robinhood chart. We've been looking at it on the daily time frame. And even though we may be able to see some consolidation ranges on the daily time frame, I want to go down to a lower time frame because it's going to be easier for us to see it there. So let's go ahead and pick a different time frame. So let's go to the H1 time frame. Okay, so now that we're on the H1 time frame, we can see some very clear consolidation ranges. And here's one right here that I want to highlight. This is a support where price kept bouncing off of this support. And there's also a couple of resistance areas, but I'm just going to draw one. So the main one that I see is about here. And we can see that price has just been bouncing between these two values, roughly continuing to bounce in between these two values around 119.38 and then also around, let's just say 113.77. So it's been bouncing around these two areas roughly. So anyway, it's a little off, bouncing between 1871. Let's just say that. Okay, so if we go to a lower time frame, we can see this information a lot more clearly. So let's go to something like the 5-minute. Okay, so now we're on the M5 time frame, and then let's just go ahead and find the area that we drew on the other time frame. So you got to scroll back a while. Okay, here it is right here. So we can see very clearly that price has been going between these two ranges, essentially going between this, let's just say 1879. I know I've changed it multiple times, but basically between this range and then also this range. Price has just been bouncing between these two areas, and we can see that it's been respecting, for the most part, it's a little crazy in here and in here, but for the most part, it's been respecting this level on the support side. And then also at the top, we have resistance areas where it's been mostly supporting or mostly respecting that as well. So that's something to pay attention to, especially when you're looking at ranging markets. But you can see this entire time, it was just doing this and not going anywhere. And then finally it broke out and then it broke down. So we're going to talk about that in a second. Now listen closely. A ranging market is not boring, even though it may seem that way because price is just going back and forth. It's just a different environment. And the mistakes that traders make is using trending logic inside of a ranging market. They expect for the price to continue, and sometimes when the market is ranging, it is basically pausing for a continuation. And sometimes instead, the market rejects a support or resistance, just like I showed you, and that disconnect can create doubt as to whether or not you're in the right direction inside of the trade. You didn't do something wrong. You just brought the wrong playbook at the wrong time. And sometimes you just need to wait for a breakout. So let me give you a real world analogy. So think about driving. A trending market is like driving on the highway. And once you're up to speed, small adjustments keep you moving forward. You don't slam on the brakes every time you see a curve. But if you drive in California, you may see this a lot and get really frustrated. I know I do. But generally, you stay in your lane and you just let the momentum do the work. And a ranging market is like driving through city traffic. You stop, go, red light, green light, construction, somebody's driving slow. And if you try to drive like you're driving on the highway through city traffic, you're going to get very, very frustrated. And it's going to happen really fast. You're the same driver, you have the same car, just different conditions. And you're also going to have a different environment and then also different rules. So how do you tell the difference quickly? Here's a simple filter I want you to start using. Just ask yourself one question. And that is, when price moves away from a level, does it stay away? If price pushes higher and immediately snap back, like we saw on that chart, you're likely inside of a range. But if price pushes higher and pulls back slightly and then continues, likely you're in a trend. And this is going to be an uptrend in this situation. The opposite is true for a downtrend. But that's essentially it. So let me go ahead and go back to the iPad and give you an example. So back on the iPad, these are the support and resistance areas that we've marked off. And we can see that price broke out, but then it snapped back inside of the range. So usually people may call that a false breakout. But in this situation, since we saw that price broke out and it continued to break out on the bottom, the trend has actually changed. So it just paused for a little bit and basically it started to sell off, and now it's in this short-term downtrend, even though the overall market is up. So when I was new at trading, I used to wait for confirmation for price to break out either up to the upside or for price to break out to the downside. So markets don't announce when they're switching. A trend can change into a range, and a range can turn into a trend. Basically, your job is not to predict how it's going to switch. Your job is to just wait for confirmation. And that's why I gave you examples when we were looking at the chart. So you may be wondering, what should you actually do with all this information? Well, here's a simple action plan that you can take, one that I've used time and time again. So step one is going to be to zoom out to a higher time frame. Something like the daily or the weekly time frame usually works really well for me. Step number two, you need to mark off obvious highs and lows. These are typically easier to see on those higher time frames. Typically, sometimes you may have to go down to a lower time frame like we did here. Step number three, only apply continuation thinking when the market has already proven that it wants to continue. If it wants to continue up, you'll see higher highs being made and higher lows. If the market wants to go down, then you'll see the opposite. Basically, this is just serving as confirmation for you. And like I said before, when I started, I used to wait for a confirmed breakout. So most of the times it would work out, sometimes it wouldn't. Basically, that's just the probabilities playing either for you or against you. But basically, what you want to stop doing is putting your opinions on the chart and just let the markets reward your patience. Because ranging markets punish impatience brutally by taking your money. And you may have heard me say at times, I got chopped up. It was because I was chopped up in the range. And that's just the nature of trading. So once you have a bit more patience, you will stop feeling like you're getting tricked, and you will start feeling like you finally know what to do and start making decisions that you can actually be confident in. So now, if you want help applying this in real time, if you're new and you want a clear path to your first profitable trade or just your first trade in general, start with the Trading Launchpad. If you're new or have some experience, and you want to start trading with consistency, structure, and feedback so you can finally get profitable, then the Profitable Traders Academy is where that is going to happen. Both of those programs are linked below, and if this video was helpful, like and share the video, and also comment the word trend in a comment section below. So that way I know that you'll keep building on this idea and being patient and following what the market is telling you. I'll see you in the next video.